U.S. IPO activity picking up ahead of SpaceX's splashy, highly anticipated debut. A lot of adjectives there. AI chipmaker Cerebras also upping its IPO target to as much as $4.8 billion as demand continues to build for its products. Joining us live in studio is a man with stakes in both companies, 1789 capital partner Paul Abrahimzadeh. Paul, it's great to see you again.
Thanks, Katie. Thanks, Romain.
So, as I mentioned, I mean, you're an investor in Cerebras, you're an investor in SpaceX, and you put those two together. It seems like you have plenty of exits coming up.
We do. We're fortunate. We had Grok last year when NVIDIA bought them on Christmas Day. Really a continuation of the same theme. You've got insatiable demand in the public equity market for AI. We look at the numbers with $2.5 trillion of expected AI capex this year, $1.5 trillion of that in digital infrastructure. NVIDIA's got a $1 trillion backlog for Blackwells and Vera Rubins. And you've got companies like TSMC with $60 billion of capex this year. It's all playing into the same theme, which is exponential growth of capex, obviously tied to ROI and cash flow in the future, but a highly enduring theme. And you're seeing that now expressed in the IPO market as these companies look to exit. M&A is another obvious venue. You've seen the SpaceX Cursor news. So we think we're still in the early innings of this monetization cycle across the portfolio.
Well, it's interesting. I mean, Cerebras in particular has sort of been positioned as an NVIDIA alternative, an NVIDIA competitor here. And it's interesting to hear you say that there is this insatiable demand, and you can see that being reflected, especially in Cerebras, basically upsizing this IPO. And the fact that that dynamic is still playing out, even though it feels like you have every company trying to come out with their own AI plan, still there is this need for supply, this demand for supply of actual companies coming public.
Yeah, in spite of the pullback today, we've seen a re-rating of multiples across semiconductors, trading anywhere from 10 to 18 times forward revenue. That's a clear benefit to companies like Cerebras that are smaller competitors to NVIDIA. The reality is, from an AI standpoint, you've seen this evolution from consumers moving to enterprises and then governments as the end customer. And then you've seen an evolution of this move from training to inference. And a company like Cerebras is obviously very well positioned, as was Grok. So the market is getting more sophisticated. It's getting deeper as there are greater applications. I think the MIT study that was put out last year is already stale, indicating that enterprises were really not benefiting from AI deployment. Yeah. We're seeing that across the economy. It's probably part of the reason why the S&P is trading at a 22 times forward multiple versus 17 times historically, is people anticipate greater efficiency, higher margin, and really growing into those multiples.
I am curious about what's going on in the private space, particularly with some of these big private companies now presumably going to be public in short order here. Does that change the complexion of what we've seen, particularly, and I'm talking primarily in the tech Silicon Valley space?
Well, I think you're seing portfolio rotation on days like today where people are making room. You can't understate the size of some of these IPOs. We've discussed this previously. When we were here last, we thought the IPO sizes were going to be large, but not necessarily as large as they're being discussed. And I'm referring to the three big ones on the horizon. The good news is the current data points in the technology IPO market indicate you've got a clear path to $75 to $100 billion of demand for much smaller jumbo IPOs. What'll be interesting to see is how the banks tap into global distribution, retail, which is a much bigger factor today, as well as passive capital. I think the fast tracking of index inclusion for some of these mega cap companies that are going public will be a big factor.
I am curious also, though, about a lot of people, particularly on the individual investor side, trying to front run this by sort of getting into sort of these vehicles while they're private. Anthropic actually put out a warning today, say be careful of stock certificate scams. OpenAI has also made warnings about that as well. And I am just curious as to how you see behavior and sentiment in that space and whether it is sensible, for a lack of a better phrase.
There's a reason why the private market's restricted to sophisticated investors. So you're raising all the right points. It gets back to the same fundamental principle that you've got 15% of public tech companies growing over 25%. So there are some great ways to play high growth, like you've seen with the recent results out of MongoDB and Datadog, but a small number of companies that are exhibiting this type of growth. When you look at the private market and companies that are in the market right now growing triple-digit percentage points on the top line, there's immense demand for those companies, which is why people are trying to find ways in the private market to get access ahead of IPOs.
And I do wonder, whether or not you have a position on some of the talk that we've had about the index companies fast-tracking IPOs such as SpaceX to enter their indexes into faster. Certainly, you have critics of that move saying that these names, there's a reason why there is a delay before they're added to indexes. They need to season, et cetera. As an investor in the private company, I mean, does it matter to you whether or not they're added to the index on day 15 versus, months from the actual open?
We're long-term investors, so we're less concerned with the daily volatility in the share price. In general, we think it makes a lot of sense. The reality is those rules were originally written when you had smaller scale companies going public. Now, with this forward slate of some of the largest IPOs we've seen in history, they will have deca-billion-dollar revenue scale at the time they go public. So the prophylactic that was put in place to ensure that you don't have companies that are too early going into an index, I think is no longer the case with some of these larger cap companies. We've never seen trillion-dollar market cap companies.
Well, that's what I'm curious about. I mean, right out of the gate, they already meet the S&P criteria.
Exactly.
So, if you're running a passive fund of some kind, at some point you're going to have to own this.
Exactly right.
Yeah. Okay.
Yeah.
Sorry. That really wasn't a question.
No, it is interesting. And to sort of Romain's point, we've been batting around the idea, does this take the shine off of NVIDIA, some of those other names that have been leading the charge? Because I think you've made the point on this program before that you think about a SpaceX, for example, maybe a Cerberus too. Those are sort of must-own names. And, if you're a portfolio manager, if you're running an active fund, I have to imagine that that's something you would probably want to be in.
Yeah, at the end of the day, the benchmark has to have credibility. And if you have multi-trillion-dollar market cap public companies not in the benchmark, it raises a question as to what the index is actually tracking.
So I have to ask you, though, once we get through this fog of these gigantic IPOs, what comes after that? Do you think we're going to see kind of, second-tier companies, for lack of a better phrase, sort of try to follow SpaceX, Anthropic, OpenAI into the public markets?
We're incredibly excited about the depth of high-quality companies. The fact is we're looking at multi-billion-dollar IPOs as if it's a walk in the park, equivalent to what used to be a $250 or $500 million IPO. We're incredibly excited about the depth of the market and the ability to absorb these high-quality companies. We don't think the quality factor is going down after you see these three mega-cap IPOs go public. And I think that's really important. If you had a decline in quality, we'd be really concerned about that backlog and implications for capital formation as we get deeper into the year or into next year. Because of the quality of these companies in the backlog, I think this can continue for at least a number of quarters into next year.
All right, Paul, always great insights. Paul Abrahimzadeh there over at 1789 Capital Partners, of course, as we keep an eye on that potential deluge of AI-related IPOs, including Cerberus, which is supposed to price tomorrow.